Applovin stock is soaring in 2024. It's up close to $325 per share when it started the year at roughly $50 per share. Of course, I'm happy about that. I've had this stock recommended as a buy all year long. But what's going on inside the company? Why is the share price soaring as much as it is? Those are the details I'm going to discuss in this video here. I'm also going to update my buy recommendation for Applovin stock, let you know if I still think it's a buy at even these elevated valuations. So let's take a look at these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, in its latest quarterly update, Applovin management telling investors about their philosophy about how to run their business. They talk about acting like owners and treating the business with accountability. They approach each day with urgency and purpose and have an insatiable desire to learn. They're driven by a relentless pursuit of excellence, and they're constantly optimizing for diversity of thought and unity of ambition. They prioritize automation whenever possible, and they don't get bogged down by overthinking and make decisions and take action and adjust quickly when needed. These are interesting thoughts for investors to digest. As you think about investing in a business, you want to understand the way ownership, the way leadership is thinking about the direction of the company. Now, last quarter, they shared their confidence that they can achieve 20 to 30% year over year revenue growth for the foreseeable future. Now, that's great to hear when a company tells you that they're going to grow revenue by at least 20% year over year and for the foreseeable future. That's really great to see because that gives you insight into what they're seeing in terms of demand for their products. They're seeing demand for their products as being so high that they can see this growth going on, and they don't see an end in sight to that robust rate of increase. So they expect 4 to 5% quarterly growth through self-learning and market growth, with occasional step changes resulting in enhancements in their Axon algorithm. Now, interestingly, they say we can't predict the timing of these breakthroughs. And that's probably true for any business that tries to enhance the product or enhance the service. I do this a lot myself where I spend time trying to improve the YouTube business channel, the YouTube channel. And sometimes there will be breakthroughs where I find something that I can do where it will improve the viewer experience. And other times I'll spend a few hours thinking about this and there won't be any developments. Or in those 3 hours, what I will end up doing is checking off things that I checked and see that they won't work. So sometimes you just go through these development efforts, research and development, right? And sometimes they deliver something really good and sometimes they don't. But for a business to achieve success in the long term, those time spent on those developments, those human resources, hours spent on those developments should result in products that generate revenue, should result in products that customers appreciate. And that's precisely what Applovin has done. Their products have resulted in great improvements. Their products have resulted in Applovin taking market share from companies like Unity Technologies. And so investors can be reasonably confident that Applovin will continue on these efforts because they've already demonstrated success here. So far, their 20 to 30% growth is focused primarily on gaming advertisers. They're not even including e-commerce yet, even though they recently launched an e-commerce pilot that's working really well, better than their expectations. So they're increasingly confident that e-commerce will scale significantly in 2025 and become a strong contributor for us over the next year and beyond. That's great to hear also. Imagine a company telling you, like, we're going to grow at roughly 25% annually just based on the gaming segment, but we're also going into this bigger market. E-commerce is a bigger market than gaming, almost 4 or 5 times bigger than gaming, maybe even more than that. And so far, our early indications are much better than expected. And then the company telling you that next year in 2025, that segment is going to be a meaningful growth driver. So we're talking about 25% growth without e-commerce. What will that growth look like with e-commerce? That's what has a lot of investors excited about Applovin stock. And it's no surprise that the stock price has exploded the way that it has here in 2024. The company has delivered performance to back up the improvement in stock price. The stock price isn't what I like to call enthusiasm only. It's not just hope. It's not just a meme stock type of increase. It's actual tangible improvement in the business that's leading to stock price increases, which is important to distinguish nowadays with the stock market bubbling up the way it is, right? You have a lot of companies, you have a lot of stocks where the valuation is increasing without the underlying increase in fundamentals, without the underlying increase in revenue growth and profit growth and cash flow growth. You just have the stock price increasing just based on hope and enthusiasm for what may or may not happen sometime in the future. That's not the case with Applovin. They're delivering quarter over quarter significant growth in revenue, in profit, in cash flow, and forecasting those will continue because their products are so much better than the competitors' products in the same category. One not so great thing that the company talked about is that they will shift to an annual shareholder letter instead of a quarterly shareholder letter. And this is something I've talked about a lot in my several years on YouTube now, is that when a company removes transparency or reduces transparency, it's generally a bad sign. And then when they increase transparency, it's a good sign. So what management is doing here is taking a quarterly report and moving it to an annual report. So instead of getting information 4 times a year, you're going to get information just 1 time a year. Now, it's not a very big deal. It's just reducing transparency. You're getting less information. And of course, if you have less information, it makes it more difficult to make a decision on whether or not to buy an investment. So in all cases, when this happens, regardless of the company, whenever you're getting less information, it's usually a bad sign. And whenever you're getting more information, that's usually a good thing because it makes your ability to analyze a business that much easier. And I talked about earlier the fundamental improvements of the business. In the latest quarter, revenue increased by 39%. Adjusted EBITDA increased by 72%, and free cash flow increased by 182% in the latest quarter. So with these types of increases, it justifies an increase in the stock price, right? It's not just based on hope or enthusiasm. These are actual increases in revenue, profit, and cash flow. And whenever you're curious about a stock that has increased in value by this magnitude, always check the fundamental performance of the business, revenue, profit, and cash flow to make sure that the increase is based on something tangible and not just based on hype, which is happening a lot lately in the stock market because of all of the enthusiasm. All right, so Applovin stock is now trading at a forward price to earnings of 47.5. This is much higher where it started the year at less than 15 forward price to earnings. Still, the business has improved to a degree that justifies this premium valuation. And so today I updated my buy recommendation for Applovin stock, and I will reiterate that I still think it's a buy, and I'll update that recommendation today. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.